this event where we have great leaders, great minds talking about the current topics: digitization, automation, transformation, all technology that is there now, that's been talked about often. Now, technology, of course, plays a very important role in our daily lives. Be it our, even the phones, I think the iPhones, every year there's a new version that is coming up. So the next version coming up in October. So those who are planning, you can always decide. And also in the corporate world, if you see, technology is evolving. The biggest rollout of technology has been 7 years back with the introduction of GST. After the GST was introduced in 2017, there has been this e-bill that was introduced, e-invoice that was there, a lot of rules and a lot of validations that has been brought out. Like for example, you can take ITC based on GSTR 2B if the invoice is in 2B. If the vendor has not filed as 3B, for example, you have to reverse your ITC that you have taken, so on and so forth. With these changes coming in regularly, and also in this third term, don't be surprised if you get so more mandates and rules that's been introduced. So with all these new developments or the validations that's been introduced by the government, our organizations, the different department in the organization also has to transform itself so that it can be in line with what is the requirement. For this, the different team members in the organization need to be given the inputs, the data, the real-time data, so that they are able to make an informed decision and go ahead. Like for example, the treasury team, the logistics, the vendor onboarding, etc. Just a question to all the CFOs over here. So with all these happening, anybody would say that still 7 years down the line, we are still facing challenges, or everything is settled? How many of you would say that we are still facing challenges? If you can just name one or two challenges that you're facing.
Few things like
we are getting so many notices.
So notices, yeah. Yeah.
Yeah, that the ITC part basically.
Reconciliation, purchase reconciliation, of course. So whereas you all have definitely must be working with some way or other and must be having some system. Technology is always evolved. So still today there are challenges that are being faced. I have just noted on a few of the challenges that you would be facing. One is you are still struggling with the purchase register, as you said. Purchase register entries are inaccurate because there are something which is internal and external. If there is a manual intervention in creating a purchase register, of course, there are some errors that can be there, some validations or some controls that you are missing it out. Invoice has gone to some authorized person, has not come or is not a part of the purchase register. You can see that invoice in GSTR 2B, but you cannot take ITC because it's not there in your purchase register. Some of the companies still do take the ITC, but this is a very high risk. Suggestion would be not to take. Yogesh is here, possibly he would be able to throw more light on this. Vendor is not compliant, so the onus of the vendor's compliance is on you as a purchaser, right? AP team has to make decisions. It's not only the credit period or the invoice has been authorized. You also have to see if the invoice is in 2B. So a lot of parameters they have to check before they can pay the full amount or they have to pay only the basic amount. Vendor onboarding, what sort of vendors are you working with? Any issues or delays in generating e-invoice, e-bill, any delay in this, especially the month end, if it's a manufacturing company, it leads to a lot of issues. I think there will be line of the trucks that's standing outside the premises, the goods you're not able to move the goods out of the factory. And as somebody said, a lot of litigations. So IRIS GST, IRIS is a regulatory technology company. It's the only listed SaaS entity, trusted by more than 2,000 large and medium-sized organizations at a pan-India level. We are present in 52 countries globally, more than 23 years of experience working with business registries, central banks, stock exchanges, etc. So few of our clients here. So today I'm going to just cover three major pain points out of all that I had. Of course, there could be many more, but these would cover most of the issues or the challenges that the organizations are facing. Vendor profile. So how do you know what type of vendors you're working with? Whether they are good vendors or you need to look at any replacement, etc. So if such a report is there with you, like for example here if you can see, this pie chart where you can see fully compliant, so based on the past 12 months GSTR 1 filing status, GSTR 3B filing status, if a company has filed and they are 100% compliant, also one other parameter is that vendor mandated for e-invoice? In one of the sessions we were listening earlier, how would you know that a vendor is mandated for e-invoice? You do not know. So long you would have maybe sent a declaration to your vendor and most probably you would not have got a reply from them, right? So you don't get a reply from. So this particular application which is there, a vendor profiling, will also understand whether the vendor is more than 5 crore, is mandated for e-invoice. Of course the exempt categories are out of this. And if he is mandated for e-invoice, is that vendor generating an IR number and QR code? Without that, that invoice is not valid, you cannot take ITC. So the first two categories are good vendors.
I have a question basically. If he is not making an e-invoice, but he is putting in GSTR 1 and we are getting it in 2B, then 2 we are not allowed to take
You are not allowed to take ITC on this. If a vendor is mandated for e-invoice and the invoice comes without IR number, QR code, unless he is in the exempt category, like those BFSI segments are still in the exempt category and the GTA. So if you are getting an invoice without IR number, QR code, you are not supposed to take ITC.
So how to know that whether the vendor has a turnover of more than 5 CR?
Yeah, so the solution that we have will, based on the GST number, we'll be able to tell you whether the vendor is more than 5 crore and is he mandated for e-invoice. That is one of the parameters we do the vendor profile. So the three parameters, as I said, is GSTR 1 filing status, the last 12 months compliance status is what we see, GSTR 1 filing status, GSTR 3B filing status, and e-invoice mandate. So these three parameters we give a score. Fully compliant is always all the 12 months he is 100% compliant. Generally compliant maybe once or twice in the past 12 months you would have missed. These two categories are good vendors, you don't have to worry working with them. But always we look at you don't have to look at the universe as a whole, you only have to look at exceptions. As CFOs you must be very busy, you should only look at what the exceptions management is what you're supposed to be doing. The last two, the frequently not compliant and the irregular, which are almost you can say 26% of the vendors. I'm sure you'll agree with me, these 26% of the vendors are the ones which will take more than 80% of your time, of you and your organization. Following up with them, you can't take ITC. If you have taken ITC, you have to reverse it. And your treasury team will not be able to predict a proper cash flow, they'll not be able to make it properly. So all those things, lot of issues that crop out of this 26% of the vendors, which is actually creating a issue or a pain for the organization. So what do you do with that? So with this list of vendors who are falling in this category, you can possibly have a discussion with your procurement team and the production team. And of course, some of them, the production team would say still, okay, these are the ones who are giving very good quality of material. Still, we need to work with them. You cannot avoid removing all the non-compliant vendors, but at least you can be careful as to what you are paying them, ensuring them that you are not taking ITC on this if the invoice is not presented to me, and the payment decisions that are there, not to pay the whole amount without checking all the parameters. You have to be extremely careful with this 26% of the vendors, who would actually, the whole organization would work afterwards in a lot of follow-ups needs to be done. Next point would be the purchase register automation. As you have said, purchase reconciliation is one of the major pain points, irrespective of the size of the organization. Large companies, still if you are there, you are getting 97% of ITC that you are eligible for, and the 3% is still a large volume. So right, you have to reach, how do you reach that 100%? This purchase register automation, what is done is the vendors are categorized into two major segments. One is above 5 crore, other is less than 5 crore. Above 5 crore, as I said, we are able to identify those vendors are generating the e-invoice. And when the e-invoice is generated, I'm sure you all know that in T+1 or T+2 days, the invoice is there as a part of the GSTR1. So if you are generating e-invoice, your GSTR1 is getting auto-populated by GSTN. When the GSTR1 is getting auto-populated, it becomes the GSTR2A for to whom you are supplying. Okay, so those JSON, the data from the JSON can be pulled. So here, no manual intervention. Whatever is being filed by your vendors is the same data that you are taking it in your purchase register. It is still in the parking stage. You are still not posted the entries. You have not still created a purchase register. It is all parked in one place. The other vendors, other set of vendors who are less than 5 crore, who are not generating the invoice, there the OCR can be done. It could be a soft copy, the email that they are sending, or it could be the hard copy which can be scanned. The OCR can be done, and it can be compared. So here OCR of course depends on the clarity of the invoice, of course, and through the system, the machine learning part of it, the intelligent document processing that we call, the machine is taught how to minimize errors. So as and when the time passes by, the more that you do the OCR part of it, machine will start taking less number of errors would be there. So here if you see both the 100% of your vendors, there is no manual intervention at all, except for the small percentage there you need to edit if there are small changes that needs to be done. These set of purchase entries that are part of the system, so this is the flow that happens. So there's a 4-way check, there's a 3-way check with the PO, with the purchase order. Now imagine a situation where today is the 20th of June, you have got an invoice, you have raised the PO from, let's say, Maharashtra, and the vendor has sent an invoice to Gujarat, the PO is Gujarat. So here, if you are booking, if at the time of manual purchase entry, if you are not checking this, you will come to know this mismatch only after the 14th of July. So many days has passed by. So in the situation where you are doing a purchase register automation, you will come to know 20th invoice. Today if you are booking an invoice, you will come to know today itself that the POs are not matching. You would return that invoice back to the vendor, asking him to change it to Maharashtra, and this invoice would be correct, which will be tallying with your purchase order. The GRN will check wherever you are purchasing the goods, the PON check, GRN check, GST check. So is the vendor, when you are onboarding him, possibly he was active at that time, of course he would be active. But today when you are booking the invoice, the status could have changed. The vendor would be possibly cancelled. So how do you know that? If you book an invoice of a vendor whose GST is cancelled, again you cannot take ITC. So this you will come to know on the day of booking the invoice itself, and with all these checks, there will be a financial approval, there will be a workflow where there will be a maker, checker, a financial approver who checks it as to which GL it has to make. All these things after proper checks, you can take it, post it in the ERP and create a purchase register. This purchase register is created based on a 2A, 2B, but it goes for reconciliation into your ASP application. Of course, the result will be maximum ITC that you can claim, and this reconciliation result can be taken back into your ERP system. So who is it going to help? It's going to help your AP team when they are going to make the payment. Now instead of looking at the report saying that okay, this invoice should have, this particular invoice should have paid, visited to be, all those things, instead of that, if they are getting this as a feed in the ERP itself, they'll be able to make a decision. Like the system also, that the code can be written in such a manner that the payment block and block can be made as in line with the policy that you are currently adopting. Every organization has got its own policies. Like for example, some organizations would say unless and until the invoice is in 2B, we will not pay the invoice at all, the whole invoice is from. Or the other school of thought would be, if it is not in 2B, pay the basic amount, hold the GST amount. So whatever be your organization's policy, the program can be written in such a manner that you can, the AP team gets the proper inputs and also the suggestions saying that okay, for this you can pay the whole invoice, or for these invoices hold the GST amount. If you are holding the GST amount, of course the invoice will be again checked. It was there in 2B, then at that point in time, the same invoice will be paid for the second time only for the GST part. So you are ensuring that you are not taking an ITC. If you take ITC, of course, you are inviting notices at a later date. So this is our automate and streamline accounts payable, where I'll take you all quickly through this. There are multiple authorizations and access. Role-based controls are there. bulk invoice can be digitized. Auto posting of invoices, so as I said, there are around 50 controls which are there. If you can jot down and say, okay, if these out of 50, these 20 controls or 20 points are all, it fits the requirement, then it can be auto posted. Again, the exceptions management. If it's all okay, so why do you sit and check it again? The system is doing the check-in. You can automatically post it into your purchase register. You only work on those where it is not, matching with the criteria or your mandatory controls that you would like to have while creating a purchase register. GST validation, automatic PO, GRN checks. Reconciliation with 2A and 2B. Reconciliation with 2A is also equally important because 2B of course you're going to do it for claiming the ITC, but 2A for following up with the vendors. If they are filing the GSTR, it's there, they have generated e-invoice, it's there in GSTR 2A. But what if the invoice is not there in 2B? Okay, so you cannot take ITC. Let's say it's also there in 2B, but is it mismatched? So is it well within your tolerance limit? Can you take ITC or not? That's another decision which you have to take. It's also in 2B, it's also matching, but if it is, the vendor has not filed this 3B, then you can't take ITC, you have to reverse the ITC. So all those features that can be there as a part of your ERP system based on which you can work on the ITC. Also there's MSME, if your vendors are in the MSME category, you have to pay within 45 days. The 180 days also, if you have taken ITC, you have not paid the vendor in 180 days, you have to reverse your ITC. All these things can be taken care of by the system itself. You only get the report based on which you have to take the action. So it leads to efficiency process. Accurate ITC is what you will take. Hassle-free audits, which everybody dreams of, and improves the liquidity. So this is like an ERP agnostic. It can work with any of the ERP. It could be SAP, Oracle, Microsoft, whichever ERP. It can work with that. There's a 3-way reconciliation. There's a configurable workflow. So you say there is a standard workflow, but if you want to change it or tweak it as per your requirements, that's also doable because a logistics company and another manufacturing company would be having a different process that we will follow. So these workflows and the controls and validations can be based on what is that you follow in your organization. Enhanced process invoicing, handling PO, non-PO categories of invoices, real-time GST validations, tracking non-compliant vendors, and MIS reports. So the last thing that I would just take you through is the litigation management, which I think you said about the litigations and you're getting so many notices. Government has a tool at a very high level. It checks to set of data, not matching, you get a notice. So you would be currently possibly tracking it using Excel sheet. Somebody is sitting, logging into the GST portal or the income tax portal and making an Excel sheet out of it. Again, person dependent, manual intervention could lead to errors. And you could also miss the due dates, and keeping all in a folder, manually tracking the due dates, dependent on employees. So not creating a corporate memory, you are only dependent on person is not there or he has left the organization, then there are a lot of issues you spend more time in getting the data. Creating MS for your board and struggling with retrieval of documents. So possibly if you are following on this, then we have a litigation management system, which this litigation management system, LMS that we call it, is not just a tracker which is there and available in the market. It's not just a MIS reporting tool also. It's being made in partnership with a consultant who is very well, or his forte is indirect and direct taxes litigations, who are present in pan-India basis. The requirement that came from them saying that okay, GST is anywhere there and some of the parts of GST, if you say the GSTR 1 and those things are settled down, but how do we track it? And it's a painful activity, so we thought there is a requirement for a LMS tool, and this is a detailed litigation management, intelligent litigation management tool, I would say, which will take care of all your daily needs of your litigations. We have been talking about AI and ML, so reading a PDF of the notice, creating a summary, so that that at least a little bit of your manual intervention can be reduced, and then you go through the summary and then whatever small edits are there, make it, and then you can, that these becomes a part of the litigation management system. Issue-wise tracker, you can create issue-wise tables where, at a centralized location, if you are trying to see what are all the notices that are there, most commonly, suppose 2A versus 3B, every stage of your organization is getting this 2A versus 3B, for example. So you can analyze it, what is the reason for this common, the notices, why is it coming so common? There could be some reason, possibly the tool is not supporting you or you've not done the reconciliation properly. So analyze those and then try to reduce that, try to address those points so that you get less number of such notices going forward. As and when you are purchasing, you can map it to the tax implications, thereby creating a GST profile of the organization. The tax repository, tax position that you are taking, along with the judicial precedents and the legal opinion can be stored in the system, which will help you refer whenever you need. And this also can be updated as and when there's an updation that is there. It's a single repository where you can have a view at the PAN level, at the GST level. You can also have a division level. So suppose your organization, you have segregated into south, east, west, the regions or zones, for example. It can help you in a zone-wise tracking the litigations also. The dashboard, of course, which helps you with coming through the age-wise analysis of the notices, division-wise analysis, all those that is required for you to keep a track, how many open cases are there, at what stage those notices are there, who is responsible to reply to those notices. Alert mechanism so that you do not miss on replying any notice. You can customize your alerts. You can say 5 days before or 1 week before you get somebody in the system suggesting that you should start working on these notices. MIS reports where you know the demand of tax, your how much you are paying, your tax admitted and that what you have paid. So there's a master report and you can create your own reports as you require for your management that you have to submit. The contingent liability report, which is in line with the format, is in line with the listed entities. So the movement of provision quarter-wise, contingent liability disclosure, CARO disclosure, so all these things which are there, the system will make it for you. So just to summarize this, what IRIS has got a 360-degree solution. It helps you in generating e-invoice, e-bill, AP automation, reconciliation, 2 levels of reconciliation, a basic plus advanced reconciliation, where you can have your own parameters and do the reconciliation. Vendor communication is a part of it. From the system itself, for all the mismatches, the system can send mails to the vendors. All the GST return filing and litigation management, which I discussed upon. This notice management is basically to fetch the notices from the income tax portal as well as the GSTN portal, so that you do not miss. There's no need for anybody to sit and log in. It's a bot solution where it will run every day. You get all the notices, and it will, once this notices then is then a part of the litigation management. From there you start, the journey starts. There are certain APIs for like Peridot and all, which you can also download. IRIS Peridot, which is there in the App Store. This is actually, if you can open the camera and then focus it on the GST number, you will get the status of the GSTI, whether it's active or it's cancelled. You also come to know whether that GSTN is mandated for e-invoice. Then the filing history, right from July 2017 till date, the GSTR 1 filing date, GSTR 3B filing date, all this is readily available. This is one-on-one, so you can just scan it and you get it. But we have APIs which you can integrate with your ERP system, and that will give you real-time information. So there are some struck of companies and for which you have to apply in your, you have to mention in your annual report. So we have a stall. Any questions, I'll be happy to take. Or we have a stall outside. My colleagues are there. We'll be happy to answer if any questions you have got. So right now.